last episode, we missed your final point.
Yes, I have belatedly remembered something that I was intending to say with the intention of calming people that may or may not be freaking out amidst the swinging of the perception pendulum. We're at hysteria or near hysteria, and who may or may not be able to take their nose out of the news. And so the first thing I said, just to reiterate, is if the business won't go out of business, its stock cannot drop to zero. Your money cannot vaporize, which is emotionally loaded language that I'm seeing in a lot of headlines. And the second thing, I remember it was 2011, and I was fresh off of getting very into 4-hour work week and then the 80-20 principle. And I remember my dad was visiting, and I remember he was smoking a cigarette on my balcony, and I asked him the question, so if 80% or more of the value is going to come from 20% or less of the information, as it pertains to stock picking, investing, what is the 20% of information or less that gives you 80% of the value or more? And I remember he blew his cigarette. I don't think it was directly in my face, but like near. And he goes, that question was surprisingly not stupid. Information out of the company is signal. Everything else is bullshit noise. And so one thing that I would definitely suggest to people that are feeling sort of just completely run over by uninformed pessimism, informed pessimism, the screamings of the news, you're feeling like your sort of nightmares and tears are their recurring revenue dollars and you can't stop it. You're stuck in this morass. One thing to consider is that you can get your information from elsewhere. And if you are invested in companies, you can choose to get your information from those companies rather than some kind of a either ethical or twisted middleman who may or may not be deliberately regurgitating that information in a way that is designed more to frighten than to inform. And that is an option that is available to everyone for essentially any publicly traded company.
Yeah, previous episodes you mentioned Jeff Bezos' letter to shareholders. I jumped on and checked that out, and it was amazing. A lot of people have negative opinions of hyper billionaires, maybe even trillionaires, whatever, but it cut straight through, and he was directly addressing investors and their interests, and I found it really informative.
Yeah, no trillionaires yet. But, a couple of years ago, being $1 trillion company wasn't even a thing. And there's plenty of management teams that own 20% of businesses. And so soon enough, there will be trillionaires on a long enough time horizon. And, it's worth asking. So what about Bezos's informed optimism did you find so interesting or valuable?
Yeah, I think we were just talking about this before as well, right? The create more than you consume, I think, was a massive piece for me. Obviously, that's not going to resonate with everyone, but heading into working with yourself and just like getting older and thinking more critically about how I'm going to live life, it's probably going to be more important for me to create than consume. And also with that, I think he had this strong point that really resonated with me around I guess how the universe is going to force you to try and comply with its workings, and you have to resist it if you want to create more than you consume, if you want to live a meaningful, not meaningful life, that wasn't the words he used, but I think a life that you would reflect on and say, I did what I wanted to do.
Yeah. Well, it's one of those things where, because obviously I can feel people's hackles raising, like, billionaire worship, whatever, but essentially, like, it's like any other pendulum. Like, clearly somebody that has achieved that level of success is doing and thinking and believing something that's constructive and good and right. And maybe you can raise ethical objections that their answer to like how much is enough is not like your answer to how much is enough. And there might be aspects of what they've done or what they're doing that you're not totally in cahoots with, but to allow those sort of ethical, sensitive misgivings to completely obscure what you can learn from those people is a mistake. Because generally speaking, anybody who's Tony Robbins' thing, like success leaves clues, anybody who's won that big has something to teach, clearly. And I do think that if you're feeling powerless, penniless, whatever the case may be, to go in and carefully learn from, do a bit of, I think that worshiping billionaires or like learning billionaires just for the sake of it is not that helpful. But if there's a purpose in doing targeted research, that could be one of the most high ROI things that you ever do, both financially and also just energetically. Because to pivot from a mentality and a belief system that isn't serving you to one that is, can be the difference between never escaping a trapped situation and self-liberating 10, 15, 20 years earlier.
Yeah, I think the first figure that helped me, I guess, get to a point where I started to understand that was worth looking into wasn't necessarily around wealth, but it was like Israel Adesanya, and he was actually talking about the importance of being inspired. And so his whole point was like, if you look at someone and you have a visceral negative reaction and you could possibly change that belief, it's worth entertaining the other side of the question, what could I learn from this? And so even if you don't like something, what could you learn from it? And if you can learn something from it, then be inspired. But that's a better position to be in long term than just feeling negative.
Absolutely. Because what does the flat feeling of negativity get you exactly? And generally speaking, I mean, it's like inverting failure into a lesson that can help you turn the table, or inverting a massive disappointment or disenchantment into a vital learning experience that that won't repeat itself, and B, you can be a better version of yourself effective immediately. Why would you not? And again, like someone like Adesanya, perfect example. Like, you don't necessarily have to love his public persona to learn something invaluable from that guy.
Yeah, absolutely. And in terms of like fighting, I'm sure you would have found this with chess. If you lose and you don't pick it apart and figure out what the other person did to win, you haven't respected the process that they've gone through. And I feel like you have to respect it, even if you don't like it, even if it hurt you, even if you got knocked out. You have to be able to look at it and respect it for what it is, to learn from it.
Yes. What's the saw for that? Win or learn?
Yeah. Win or learn.
Yeah. And so that is like, you actually helped me do this with social media. I don't mind confiding to people that, as someone who has a formal training in like screenwriting and book writing, and like part of the reason that I have been able to slide into the financial space as a teacher of investing is that I wasn't over prepared to do it. So I'm not viewing a mistake as the worst thing that could possibly happen. My ego in a lot of ways was never on the line. Whereas if you have a screenwriting background, as a great copy coach of mine explained to me a while ago, he's like, I think what you're seeing is that you need to create and justify $100 million of production value before you can like post something on Instagram or YouTube. And he's like, that is not what's going on here. And so similarly, properly identifying what the stakes really are, and if some part of you is artificially inflating them and then keeping yourself paralyzed or stuck, that can happen in any realm of life, from health to wealth to relationships. And so actually understanding that the worst thing that can happen if you make a bad investment or launch a business that doesn't work out or what have you is a bit of a phase plan, a recollect, a post-mortem, a re-strengthening, and then a next chapter. That's the worst that can happen. There's really not a whole lot to be afraid of. But if you haven't taken the time to make those sort of emotional underpinnings and understandings and calibrations, then you might just duck something for your whole life because it's just too scary. The consequence of a failure is too petrifying.
Yeah. In terms of getting back to understanding companies, we were mentioning before we hit the record button around company information, but not just company information, like the actual process of like assessing the field of companies. Where do you personally look for companies to invest in?
So there's a couple of ways that people can go about this. This is not an exhaustive list, but following with the closest person that I have to a philosophical soul brother in this space, being Peter Lynch, who I've mentioned, has the famous maxim, know what you own. I have always, and I instinctively arrived at this, but I would sort of turn it into the maxim, invest in your addictions. And so what is it that you have already in your day-to-day life to the point where you already have hundreds, maybe thousands upon thousands of hours of field research where you have been using the product and the service, and you have taste tested the competitors? No, I prefer this, or no, I prefer multiple of these. And you may be using it so much that you've even like tried to quit using it in some capacity and failed, and it just finds its way back into your life. Similarly to how we tend to underestimate the power of our instincts and intuitions, and we over prioritize logic and whatnot, the amount that you know about a company, a service, a competitive landscape, the future of a trend, as a power user who almost like doesn't want to be as much of a power user as you are, vastly exceeds what you could possibly hope to learn if you were coming at this from a purely quantitative perspective. What company looks the best from a PE ratio perspective, or a profitability, or any series of numbers that you want to like pile on top of each other to create a ratio. All of that is quite frail compared to how much you already know if you literally can't get the cigarette out of your mouth, either literally or figuratively. As Peter Lynch rightly pointed out in 1989, that was true then. It was true well before he wrote that, and it's as true, if not more true, now. And so when in doubt, invest in your addictions. It's a good place to start.
What if you're not addicted to anything?
People try to make that claim, and it is very easily debunked within moments.
Yeah. Yeah, well, the first thing that I thought about, and like it was just like humming with every word you were saying, it was like affirming my belief and understanding of this. And we were just talking about this off the air as well. Like social media, right? Meta. Like I feel like Meta is going to be around for a while. And I feel like it'll be a while before the United States government nerfs it. I feel like if they were going to, they would have already, with the rise in, poor mental health of young people, etc. Everyone knows how bad it is for you, but it keeps growing. It keeps doing its thing. Do you have any thoughts on Meta as a company?
Well,
and its longevity, more importantly?
Yeah, while I am talking sort of like bigger picture and historically, because the same exact thing would have been effective if you were investing during and through the Depression almost 100 years ago. This would have worked at any time that investing was an accessible thing. Social media posts are the new cigarette, I would say, the new high fructose corn syrup, I would say, the new caffeine, I would say. Those are three of the most successful areas that you could have possibly invested in during the Industrial Revolution. And more recently, I'm almost positive that I believe it was Monster Beverage, which then absorbed, I want to say Hansen, but Monster Beverage was the most successful investment of the first 10 years of this century. And that is literally investing in energy drinks. And so these concepts are alive and well. And I just think that for better and for worse, and obviously social media is is a digital equivalent of exactly the same thing.
Yeah. Yeah. So where my head went to after your initial points around like Monster and like beforehand also, influenced by one of my clients mentioning Coca-Cola and its massive dip with volatility right now, was that Coca-Cola, V and Red Bull, like V is a New Zealand owned thing, I think. Maybe it's Aussie owned. I don't know. I'd have to look it up. But I feel like I've seen so many people smash Coca-Cola, smash V's and smash Red Bull. Like people are definitely addicted to energy drinks. Yeah.
And so there's obviously, needless to say, I will lamely say, obviously this is not financial advice. Common sense that there's more to it than purely that. But as a way to get in, like look how much traction we already got, like energetically, strategically, just by talking about addiction. There's more to it than that. But as an entry point, it's ideal. So in like when I was a little kid, my parents put it's so funny how like right like at this point 2 years feels like nothing, but as a little kid there was a 2-year gap between when I was allowed to play Nintendo and when my friends were, which felt like the most like crippling eternity.
So you waited 2 years.
So I wasn't allowed to play kindergarten, first grade, and I got a Super Nintendo in second grade. I was a Freudian desire frustration to the extreme. I was like a crackhead. And so for me, when my dad introduced his take on investing best practices to me on a cruise ship in 2006, he was talking about Canadian oil and gold, the destruction of the US dollar. Sometimes hyper-intelligent old men get addicted at the thought that the world is going to end. I don't totally understand it, but I've seen it. I've seen the correlation. For me, he was explaining those principles, and all I could hear, because I had just heard that in November 2006, Nintendo was going to put out the Wii. And I was like, so if you're telling me that I go like this, Mario goes like this, I was like, that's going to be fucking enormous. I was like, so many people, I was like, maybe not for all of time, but there's going to be a time where the world is addicted to that. And so that was like an entry point for me anticipating addiction. And so, you know, and that was in Nintendo, I should pause to also add, was an ideal first investment for me at that time because I had loved it so much as a kid. I had great amounts of perspective about, I didn't know, like one thing that's cool about investing in sort of a nerd burglar but legitimate way is that it encompasses so many different disciplines. That's why I believe Peter Lynch said as well, like coming at it flatly from a finance angle can be quite ineffective, but there's like anthropology, history, sociology, psychology, obviously. There's so many different things about it that you learn. So like you can go into a company and learn its whole history, its whole like impact on the culture, its whole everything. And then that's before you get into the X's and O's of competitive advantage, et cetera, et cetera. So there's a great deal of learning that you can do beyond what the initial addiction can tell you. But it's a great entry point because you already have an attachment to what they're doing. And you already have a good amount of understanding of how it works. And so it was a great first sort of hook into it. From there, I then learned about you know, how they operate with a razor and a blade model, where a company that sells you razors, they'll lose money on the razor, but they'll make money back on the blades. Where Nintendo is like, listen, we actually also, we make money on the system and we make giga money on the controller and the games and Mario and whatever. And so you'll learn a lot from it, but it won't feel like homework because you give a shit because you're addicted.
Yeah, I get you.
Gamification and all that.
Yeah, especially when it's going up, right? In terms of
what do you mean when it's going up?
Well, like when Nintendo's going up.
Oh, I thought you meant when your addiction is going up. But I think that the addiction going up and the stock going up probably are closely correlated.
Yeah, maybe if it's healthy enough, as long as it's not damaging your health, right?
Well, I mean, like Philip Morris would have been one of the most successful investments, and that would have been at a time where doctors were telling you that smoking was salutary. So it all depends.
Yeah, I guess you're right there. To cut back to your dad's initial advice, I'm not sure if he would have told you directly, invest in what you're addicted in.
No.
So how did you go from his initial advice to thinking, oh yeah, I should invest what I'm addicted in?
Good question. So essentially it was an hour a day education on a cruise ship, 11 a.m. to 12 p.m. My siblings and I were often sort of like hungover, but excited for it because it was interesting and he was very invested in it. And I retained 4 bullet points, as we've talked about previously. Most of it struck me as overly academic, overly quantitative. It just didn't ring true. But there were 4 bullet points that I don't even know if I had to write them down. It feels like they just entwined into my memory. And so one of them was what to buy, an important need filling product, strong management, weak competition, no debt. Tick those boxes. That's what to buy. Obviously, as I have learned more and more, that is an incomplete list. Nonetheless, as a starter list, pretty damn excellent. So that was one thing. Second thing is when to buy. Buy when, like, imagine there's a financial newspaper that contains every company in the world. Find me one on page 16 that's heading for page 1.
How do you mean?
And so find me something that is not on the front page of the paper that one day will be on the front of the paper.
Oh, I get you, yeah.
As an immediate example, and I think this rang true to me at the time in exactly this way, it wasn't prominent knowledge that Nintendo was putting out. Like, nobody, if you polled a random person on the street, they wouldn't have known that Nintendo was putting out a Wii. And they also, if they weren't addicted to it, they wouldn't have appreciated what that actually meant. But by the time you got to, let's say, like February of the next year, like 12 months had passed, everybody knew. And so that's a good example of something going from page 16 to page 1 of the paper. Well, you're 25, so you don't even, like, do you know what a paper is?
Yeah, I mean, like a paper in terms of a company.
So, like, I'm talking about like a newspaper.
Oh, yeah. No,
so,
for sure, yeah.
Page 16 of the paper, page 1.
Yeah. It made sense after you, like, explained it. Like,
you may have never seen, I don't even know if you've ever seen a newspaper before, but just take my word for it. It was a thing that people did. So there was that. And then how much to buy.
Yeah.
Concentrate to create when you're a young man because you have time to recover if you're wrong. Diversify to protect when you're an old man because if you lose your nest egg, you're fucked. That was one-stop shopping in terms of putting things in perspective for me about how someone's... Obviously, it doesn't tell you the whole story, but in terms of giving you the basic arc of how someone's strategy to asset allocation should unfold and evolve over time. So much is accomplished in so few syllables, while being profane, that I really respected that quote. And so there's that. And the last one, where to buy. I've had no problems, so use, he said at the time, Scottrade, which has since been bought by TD Ameritrade, which has then since been bought by Schwab. I've had no problems, so use Scottrade. It only takes like 10 minutes if you're poor, or 10 minutes if you're slow, and $500 if you're poor, which is not a heroic price to pay considering it can change your goddamn life. And so basically, and actually that was an important piece of prompting for me, because if he hadn't specified that and then like made threats of stupidity if you don't take action on it quickly, it might not have been enough specificity and force for me to actually do something. That's one thing that I've noticed, is actually opening a brokerage account and making your first investment is infinite progress. It's from nothing to something. And that was a big part of what the guidance was as well. And I really do hope that people understand how big of a deal it is to open a single brokerage account, buy one share of one company. That is infinite progress.
Most definitely. Yeah, I agree. That first jump is very important. We've definitely covered that already in the previous podcast. So in terms of that overview, I'm pretty congruent with all of that. To cut it back to the start of the conversation, after your dad blew smoke in your face and he's kind of saying that it was a good question.
Surprisingly good question.
Where did things go from there in terms of that conversation, and how do you recall it unfolding?
I'm pretty sure they ended just as he extinguished his cigarette, but essentially it was just like a mic drop. You know what I mean?
Didn't tell you.
No. So essentially you go to the company. That's it. So like read between the lines, right? Like you go to the company, like
find out.
Fuck the rest of the world.
Yeah.
Yeah. And the thing is, and some people not rightly, but understandably raise the hypothetical objection. Well, like, isn't this company gonna like, aren't they by definition selling me something, et cetera, et cetera? And I was like, well, listen, like, of course. But if it's a multi-billion-dollar company trading on a major exchange, they're being heavily scrutinized, and so they're not going to lie. And more importantly than that, if you can't or won't trust the people running the company to like give you worthwhile information, tell the truth, not abuse lying by omission, et cetera, if you can't trust them, why would your money be with them?
Yeah. I guess that comes back down to the strong management and the importance of that, right? Like, you should trust the individuals that are responsible in management. And if you don't, why are you invested in them? Yeah.
Exactly.
Yeah. So I think more what I was trying to get to in terms of like the understanding around that conversation, obviously mic dropped, but I guess what I'm trying to get at is like, obviously when you're trying to peel through all of these processes and understand a company, that's fine and well. But if you're looking for something that's going to grow, where do you look? I guess tying it back to addictions, it's like, oh, well, it would have been a mean time to invest in Instagram in like 2015, right? Or like Meta. I guess how do you see that pop up in the world as an astute investor, as someone who's got the experience you have? Do you like see it straight away, or is it like, oh yeah, wait till the second time you see it, like in terms of a product itself?
Yeah, it's difficult to codify that.
Yeah,
because there's so many different ways that a company can get bigger, be perceived as more, et cetera. And obviously the full scope of what you can research during, like in this process, there's a whole bunch of different kinds of companies doing different things. But essentially, do you perceive that they're going to get bigger and do better? And going back to the whole like informed optimism thing, fact-based faith thing, even face-melting fact thing, why? Why exactly? And so see if you can find. And a lot of the time, management's just trying to tell you. It's just a question of, do you agree? And like, are you willing to listen?
Yeah, I'm just trying to think and rack my brains of all the possible.
Well, we can go back to Bezos's letter to shareholders, right? So 1997 letter to shareholders. They make that prominent and very easy to read now. People should punch that into the Google and read it if they want to. Read that over and then tell me, does that read like it could have been written yesterday or like 2 years ago? Right? It doesn't necessarily read like something that is almost 30 years old.
Yeah. I didn't actually read that exact one. I just read the 2020 letter to shareholders.
Right.
Could you recount, I guess, the main themes of that?
Well, essentially, it is as you described it. He's talking about this is day one and we're going to attack these opportunities, et cetera. And one could easily argue that almost 30 years have passed in a dynamic industry that a lot of people were saying was crazy and was going to be a fad. Very little has changed. Even though so much has changed, very little has changed. And I think that's the whole thing about investing in addiction, doing your own diligence, finding your own face-melting facts, this is very much a choose your own adventure. There are like specific techniques and tactics that you can use to find pattern recognition. That's a term actually that I really liked from David Gardner at The Motley Fool, where he was talking about a big piece of it is building your own pattern recognition. And so for me, there are companies that I've invested in the past, focus investing wise, like significant asset allocations for a significant period of time that don't at all on the surface sound like they would have had anything to do with each other. I guess I can give a couple of examples. So like, what does SodaStream have in common with PayPal, have in common with Amazon, have in common with Netflix, have in common with Nintendo? It's like, wait, those sound like completely ridiculously different things, but like, do they really?
Yeah, one of the things that I think about hearing that I've held as like a resonant belief, like getting into understanding investing as you see it through you and through other sources online. I think one of the things that great companies have in common is great leadership and intense focus. It's the kind of focus that makes you feel a bit yucked out when you hear them talk, because they're just so much more focused than you could possibly be. At least myself, speaking for myself. I'm just like, whoa, this is intense. Yeah, not going to like list off any companies in particular, but I feel like that's a resonance across all fields. I think, hearing you talk about Jeff Bezos and Dana, like what came to mind was like Dana White. And it sounds crazy, but he always had this deep belief that they were going to grow, that the UFC was going to work. That's why he convinced his mates to buy it. And like him or not, he did what he did. But it came down to that intense focus and intense belief and understanding the market, and then how they could grow.
Exactly. And so organically from what you just said, researching TKO is the stock ticker, which owns, they might own more than this, but they definitely own WWE and UFC. If you're addicted to UFC, you'd actually even like love to watch and read less about it, but like it just has captivated your imagination, and it's a pillar on when they do pay-per-views or whatever. That's a perfectly good place to, and obviously you have to draw your own conclusions, do your own diligence, but like that's a perfectly good place to conduct a little inquiry about like, is this worthy of some of my investment dollars? And a big part of it, to your point, as it always has been, is it's not just an investment in some mystical financial technology. It's an investment directly into Dana White.
Yeah, that was my logic. And I came to that when I was explaining, I guess, the rough philosophy that you've imparted on me to my flatmate, who, he's experimenting with shares. He hasn't really thought it out extensively. And I was just like, do you think Dana White's going to let the UFC die? And he's like, nah. And I'm like, would you trust him to like double your money eventually? He's like, yeah. And I'm like, sweet. Yeah,
one could like, so if that's good pattern recognition for you, that's something to like run with and experiment with and see what happens. But yeah, from my perception of Dana White as a UFC fan, Dana White would rather anything, like literally anything, happen than the failure of that company.
Yeah,
there's no one that he wouldn't like put a boot on the neck of to like make that success more successful. And to your point, one could argue it's a little sickening how focused, but that's a subjective thing, as is all of this. Some people might look at it and be like, Dana White's incompetent and they're going to get overtaken by whatever sport. I think it's kind of a hard argument to make, but like you could see it any which way. But if you happen to if you happen to understand and believe in the vision of Dana White, you could consider it. Of course, again, there's more to it than just that. For example, their future is tethered. The future success of that is tethered to professional wrestling. And so you'd have to also factor that into it. And so there's more to it. There's nuance, but generally speaking, that's kind of been a common theme of what we've been talking about here. Is it is a better brain diet would be thinking about the leaders that are running the world than worrying about journalists or whoever that are like trying to scare the crap out of you for their benefit, not yours.
Yeah, agreed. In terms of pattern recognition, another thing that just came to mind as you were talking about backing Dana White, there's one man that I would, I guess, chuck in there. This is more for fight fans, obviously, but Yod Chatri, I think is how you pronounce his name. It might be the gym name, but he is the founder and CEO of One Championship, and he has grown in a crazy way in the last like 10 years. I think they were founded late 2000s, but really took off in the mid to late 2010s. Similar guys, completely different backgrounds, but there's that same kind of like archetype, just someone who's insanely focused, someone who's insanely driven. Like it is insane to the average person, but to them it's unimaginable to do life any different way, right?
Right.
Yeah.
Exactly. And so but this is the thing. So like, you're in the process right now of like sounding out your own pattern recognition. And so then what you have to do is understand it, test it, and evolve it. And if it comes to pass that investing in those kinds of companies, those kinds of leadership doesn't work out, then you like note that and you pivot. Or if it works out beautifully, then you note that, don't oversimplify it, but like note it and then continue to evolve it.
In terms of that specific point, like what to buy, I remember earlier you said that beyond strong management and no debt, that there was more complexity to that. Could you elaborate?
I actually can't.
Yeah. It's pretty simple. Just down to strong management and no debt.
Well,
Those are the main factors.
no. So like I've created something called the Fine Fat Fish imbalance sheet that breaks down on a one pager what I view to be like my pattern recognition. But for reasons I doubt I need to explain, like that's for clients and for me. But for me, ultimately, for people that are really wanting to build their own pattern recognition, I recommend leaping off in exactly the way that we've just talked about and building your own, finding your own, thinking about what are your personal criteria for what makes something worthy of your investment dollars. And I'm happy to share, obviously, what my dad said to me that I isolated as supremely valuable that helped me get my start. But if you say, I have found that there's such a thing as saying too little and you're being a selfish bastard, or you say too much and you're also being a selfish bastard because you're stripping away people's ability to learn for themselves. Or if you give too much of an incomplete part of a closed system, there's a way of saying too much and getting people hurt. So for me, like if people are completely wanting handheld guidance, then you do that in a completely start to finish way. Or if people are wanting to completely sort of 100% independently DIY, then you give them enough of a shove into the deep end that they're not going totally blind, but then you trust them to paddle and to ask for help if they need help. Yeah,
that makes perfect sense. That's essentially what we've done, right? And I'm like, yeah, I guess in terms of like building that out, it's definitely a great place to start because it like got me my first win, as we mentioned offline. In terms of the other steps, right? When to buy, I guess right now, right? Like no time's better than the present.
Well, yeah, to me, it's tricky. Like getting into the real like gradations of these basic principles is sufficiently complicated. I'm sure most people listening to this would agree with me when I say that there's a reason that books and most things that like are one to many you can scale and sell ad infinitum really fail people because one size fits all fails. Like I've seen enough to know, having worked with as many people that I have in as diverse a way as I have, that every single piece of this, if you're going to do it the right way as a teacher, needs to be personalized to the person sitting across from you, their tastes, preferences, risk tolerances, time horizon, everything. And so every single thing that we're talking about, there are variations or gradations that could be different depending on who you're talking to, including how much to buy and when to sell. And to simplify it though, and it goes back to something else that comes up with us frequently, the best asset that you could have as a clarification tool is your purpose on one side of one piece of paper, exactly why you're doing this, including time horizon, because I wouldn't presume to know when somebody should buy or sell or how much or whatever if it wasn't in the context of a very specific vision.
Yeah, that makes perfect sense. When I was listening to a podcast with Naval Ravikant in the weekend, he mentioned something that massively aligned with a lot of the stuff you've taught me around emotional intelligence. The point being, even for people in his position, super intelligent investor, with a lot on the line for other people as well, the gut makes the decision at the end of the day. Would you agree with that? Like he said, up top, it's all processing it, thinking it through, logical, but in terms of the emotional side of it, the yes or no, do I invest, do I sell, that's all down to your gut. Would you agree?
I think that's another thing that's come up consistently for good reason in a world that is, in my opinion, very, very dry and selfish and in all other ways, like emotionally disorganized. It's an important point to make around investing that the emotional, the EQ elements outweigh the intellectual, the academic, the IQ elements vastly. And I think that one thing that serves people well, probably across all areas of life, certainly across everything that we're talking about here, is the ideal would be You understand exactly, if someone asked you, what is the objective of this session? Or is like, what is your purpose? Why are you doing this? You could answer succinctly. And then in the context of making that happen, if you ever find yourself in the position of needing to make a vital decision, which will be often with something like this, you would want to logically and very thoroughly, and preferably also patiently, make a list of options. And so you create the menu patiently, logically, thoroughly, and then you make the decision in an instant based off of your intuition, fuck yes, no, or fuck no. And I think that's how most things work when we do them right. And because deep down intuitively, a lot of the time you already know. And again, that's where the whole like playfulness of invest in your addictions, this and that, in a lot of ways you already know. And then the rest of your life is spent reconciling with the fact that you already know, like, will you or won't you, etc. And so essentially, I mean, it's a really good question in the sense that for me, a big piece of this and why getting too far into the weeds of how the principles work is actually doing people a disservice is that this is about putting intelligent autonomy into the hands and the minds of the people sitting across from you. And the way to do that is by finding ways to create a skeleton structure that you've simplified it as much as you can, and you're providing support and guidance and whatever it is that they need you to be, that they won't, like, you won't allow them to play small. But then all of this is with the intention of having it be that they're unlocking their own instincts and they're able to honor their own intuition rather than fall back on your dogma, where if you provide too much information with too much force and it becomes too regimented, it completely ruins their ability to do that. There isn't enough wiggle room for them to navigate. There is no like spontaneity within the structure. Yep. It's just the structure.
Yeah, I guess that affirms the 2020 letter to shareholders that we mentioned earlier, talking about how your surroundings are going to try and push you into being normal, into doing things aside from your goals.
Yes. Yeah. And that actually also goes back to what we were talking about endeavoring to be the person that gives people power. Where if you're scared, that's where dogma comes. If the greed or fear is the pendulum swung too high, it ends up, you sort of bring a dictatorial, authoritarian energy where it's not okay to disagree with you. It's not okay to show up differently, which actually was mildly ironic that my dad was like upset that I ended up going with Nintendo and then Google, Apple, and Netflix. And actually, when I told him what I had done years after the fact, he looked at me like a 6-year-old prodigy that had just lost for the first time. And I was like, what? I was like, what? And so like, to me, it can show up in like funny ways with people. But ultimately, I believe the highest form of the way that you can show up for people here is exactly that, where you are pushing them to be different, but like under their own power. And if it comes to pass, as the great Peter Lynch said, not everybody has the stomach for this. Everybody's got the brains, not everybody's got the stomach. If it turns out that exposes for them in a safe environment that they really should be doing things traditionally, that's fine. That's totally fine. But then nobody who's doing it that way actually believes that they could do it better on their own. And those questions are answered. And that can only be accomplished by having a structure and an emotionally relevant and spiritually relevant support as needed.
Do you think in the correct environment that anybody could learn to invest successfully? Because one of the things that Peter Lynch just mentioned is not everyone has the gut. But my personal belief is that it is pretty simple, as far as I'm aware, based on like what you've told me. It's not easy, right? But like if you know how to believe in yourself, which I personally believe is a culturally enforced thing, you know.
I would love to believe that.
Yeah,
I would love to believe that. I think when I first started this, I did believe that.
Yeah,
that anybody can do this, no matter what. Like they just need to. If I could just get this into on their terms, they've got this. And I genuinely, like, I'm about informed optimism, like hard-won optimism, fact-based faith, you know, doing the hard work to like pass out victorious, that kind of stuff. But I have seen enough to know that not everybody has the temperament to be able to hack it as an amateur focus investor, because volatility tends to bring out, and also not, it's more than just volatility. It's the unknown, the unknowable, volatility, the stakes of this, etc. There's a lot of people, and also not the least of which is people's beliefs that they're unwilling to question, and habits that they're unwilling or for whatever reason unable to sustainably challenge. All of that can add up to people that are either completely unwilling to try, even if they're availed of all of the relevant intellectual information. They're not willing or able to go there emotionally, or people that break that and they're willing to come at this laterally thinking emotionally, but then shit hits the fan and they shit the bed. And so for me, unfortunately, I have to conclude that that's true. And, you know, like you as an example are interesting because you have participated as a fighter, you've participated as an entrepreneur. Like, of course you feel that way, but there's a lot of people that will talk about doing that stuff for their whole lives and never actually step over the line. Or there's people that will put their toe in the water, but the second there's resistance, there will be some story about why it's not right for them, etc. And it isn't that the story is true, it's that they believe the story is true. And then it's over. Yeah,
it comes down to foundational beliefs you think.
I guess in a lot of ways, I mean, there's more to it than this, but one thing that frustrates me, because it does feel treatable, it feels like you could help people pass this, but then when you can't, you're like, well, why the hell can't I? Is when people are able to supremely successfully and like intractably bullshit themselves with like a bullshit story, and they know it's not serving them, they know it's not congruent with what they're saying that they want, but they can't get out of it. To me, that's a thing that I have unfortunately come to terms with. There's going to be a percentage of that. And there's not a damn thing you can do about it. However, going back to what we were talking about, you then do conduct a post-mortem and make adjustments so that it happens as less and less and less as humanly possible.
Yeah, I perfectly get that with fighting, right? Like, fighting is challenging, fighting is tough, fighting is brutal, unforgiving, dangerous, you know, potentially very harmful to your health. But when I think about the mechanics of what, like, you've taught me and people will learn through listening to this podcast, the mechanics of like looking at a company and like finding your own thoughts, to me, I don't know, it just seems like people could do it.
I hear you.
Yeah, like it's I think like if people were raised to think that they could do it, they could probably do it, is what I think.
I think most people would if given the choice between getting punched in the face and experiencing an 80% drop of their net worth, would rather get punched in the face.
Yeah, wow, that's a real good perspective, eh? Yeah, to cut back to it, how much to invest, concentrate to create.
I've even had an emergency surgeon who's like an amazing client and success story tell me that, and he wasn't diminishing himself, and he certainly wasn't like putting this over that. It's incomparable, but essentially that he's like, I think in a lot of ways, like when you're talking to people, it's like more acute than when I'm talking to people, because they're like coming at this from a doomsday scenario that is like soulful. He didn't really get into the explanation of why, but it was a fascinating thing to hear. And I don't agree, because if I tried to work at an emergency department, I would like faint on the person that walked in the door. But to me, it's like, I get that point. It's like, this stuff is just hard. It's just hard for different people in different ways all the time. And the best that you can do is be curious about it and be as resourceful as you can as both sort of doctor and client or patient about understanding each other and solving it.
Yeah. I guess I could only speculate with that client's perspective. But one of the things I think about, where my head went to, was when I like snapped my elbow in the last jiu-jitsu competition that I had. Absolutely morbid like injury, like fully snapped back the wrong way. When I was in there, as soon as I was in there, I was on drugs, I was all good. And I was like, oh yeah, this will all sort itself out. All my friends and family looking worried, like, oh no. When people are trying to deal with money problems, like we've talked about before, some people are just trying to eat. where you're going to get your next meal versus being in a place where you're on drugs and like injured and things are probably going to be all good. Maybe some people really have a bad experience in the ED. That energy compared to worrying about where your next meal is coming from or where your meal in 6 months' time is coming from, I can fully understand where he's coming from.
Yeah. These, I mean, they're all huge predicaments in their own way, and like I wouldn't want to like diminish anyone. It's just that there needs to be, I believe, the tools made available so that people can use the technological advantages well. So like the human capital that's available matches the technological capital that's available, that otherwise inequality is very, very poor. And the other thing that needs to happen is there needs to be the understanding that if you're flailing with this solo, there's multiple ways that you can solve the problem versus, and like multiple potentially very satisfactory ways to solve the problem. There's people that can train you to help you do it better. There's people that you can just give your money to and they can take care of it for you. I just feel like there's tremendous scope for room for improvement at every step of the way, but particularly as we've talked about with the show you how and the done with you elements of the education. And I'm sure, anybody who understands fighting as well as you do, who understands medicine as well as the emergency surgeon that I referenced, the better you know it, the more that you see major room for improvement in the way that the median person is being treated, really.
Yeah. One of the things I think about with that is just there's so much misperception due to like common narratives, and the common narratives are often so far from reality. It's just a misperception of reality based on common narratives, I think is what it boils down to. Amazing stuff. To cut back to the 4 bullet points, the third point being how much to invest, concentrate to create, diversify to protect. I'm fully on board with that, but for people that are like trying to understand it deeper, can you speak on anything beyond what you've already referenced in previous podcasts and perhaps remind people what's been said? I think I remember a few of the points, but just for those watching.
We're talking about asset allocation?
In terms of how much to invest.
Yeah, so essentially the point that's being made there, how much to invest, concentrate to create when you're a young man because you have time to recover if you're wrong, diversify to protect if you're an old man because if you lose your nest egg, you're fucked. By the way, I think needless to say, but I'll say it anyway, I don't apologize for, because it's a true story that I want to be honor, but at the same time, I recognize the patriarchal part of that, which is I find hilarious. But naturally, this applies to any person, regardless of gender, of course. Yeah. But essentially, like he was screaming it at me, and so as a young man, theoretically, you could put. This is not financial advice. You could put all of your money beyond the little bit that you need to get through your day and through your life. You could be very aggressive and you could put it into one company, 2 companies, whatever. And to the point where that still felt like investing and not gambling or something that was like unsustainable and crazy, you could try that out. I am a natural fit for that. And so that was what I immediately started doing. Whereas, when you're an old man, diversify to protect, that would be arguably crazy for you because you don't have time to recover if you've misread reality or just something happens and stuff falls 95% for nonsense reasons. And so, this is a thing, of course, that I get into very carefully with everyone that I work with individually is what is your vision? What is your current situation? What is your desired situation? And what is the appropriate way for you to approach all of the above, but including asset allocation to get from here to there, but then also to stick the landing. Because if you aren't, for example, if you're determined, like for me personally, I want my career to end when I do. I believe that I want to be kicking ass in this capacity, in an evolved capacity when I'm 99 years old. My grandma was a bit of an a-hole and she lived to 99.9. And so for me, I want to be working in Fine Fat Fish happily at 100. I want to beat grandma. Like that's a stated goal that I have, but that's me. And so for me, like I want to be turning time and talent into money that is then multiplied into more money by helping people for another 60 years. And so you might not be that way. For you, the most important thing in the world might be to stop working as soon as possible. And if that's your attitude, then how concentrated does it make sense for you to be to expedite that progress? And then when you stick the landing, how concentrated does it make sense to be once you've stuck the landing? And again, there's an extraordinary amount of nuance that goes into this. But at the same time, there are archetypes and patterns and everything. And so I can see it pretty clearly for people, but I need full information before I can talk about it. And of course, they need to be the ones that actually agree with what I'm saying and then implement it. And so for me, that's, and ultimately, of course, it's their choice. And so there's a whole lot to it, but generally speaking, this is what I loved about how much he got done in such a tight little maxim that even made a little bit of room for profanity while still being concise, was that it would make sense theoretically to start out much more concentrated than you end up being. But then the question is how concentrated and how diversified. And even in this scenario, does it make sense to still be concentrated but in a more diversified way? Or does it make more sense to be straight up diversified? Or does it make sense to have everything, money that you've buried in the backyard and you've got your shotguns over it for protection? Like, what actually makes sense and is congruent with what you want, not just for you, but with ultimately the legacy that you want to be leaving for your family. And so again, that's what I loved about the quote. I was like, it captured that whole landscape of outcomes, that whole panorama of economic drama in one sentence.
Yeah, it's very succinct. I guess in terms of how that plays out for different people, I guess it all comes back to that one pager, exactly what you want. I think being around yourself, I'm definitely into fighting and all that. I'm not adverse to risk. I'm all for risk. And so I did the exact same thing as well. I couldn't imagine being past working age, where you could go out and earn something for someone else and doing the same thing that I did. Just being in one position in one company, it'd be super stressful.
Well, that's the thing. And so, nobody, as someone who's actually a veteran of doing the one stock portfolio, I advocate that for no one, unless for some reason you're wanting to learn very fast through trauma, because you will learn a tremendous amount. I think it was Buffett who I saw mention that, although he's probably spoken on everything in every which way at this point in a documented way. But essentially, if you are heavily concentrated in a position or a couple of positions, you will learn so much more than somebody that's got spread out. You're in the S&P 500. You don't even know what you're supporting. It's incomparable in terms of the education, but sometimes it's too much of a good thing. And my concern, if somebody was, there's multiple concerns that I get into in great detail and then take pains to personalize. But essentially, one of the concerns of being over-concentrated, obviously, is even if you were investing in a way that it can't vaporize and drop to zero, the volatility could cause people to actually explode. And so from a temperament perspective, it's just too much. Even if in the long term it's going to work out, for some people, it can be too much. And then there's other problems where, as they say, concentrate to create, diversify for luck. What if you invested the wrong thing at the wrong time, et cetera? And so there's multiple problems with it. But I mean, the one thing I will say for it is that two things. When it works out, you look brilliant and you're mathematically either the best or the worst investor in the world, depending on what it's doing, which you learn a lot from. And it will definitely expedite your stomach. But that is the end of good things that I can say for it. And I can definitely say that even for someone who's 25 years old, it's not a great idea.
Yeah, it definitely was pretty stressful. But when it was going up, it felt dope. And it fully almost overwrit for myself all of the other failures that I had in investing. Because before I met you, like, well, at least we started talking extensively about investing. Like, I had like 4 different, like 2 to 3, like position portfolios that I rotated through. Each time I lost. And so it's kind of like, oh, it was like an affirmation of all of the positives of your philosophy that you've come to. To draw it to the last point, where to buy, I guess that's pretty simple nowadays, right? Like, well, you mentioned, like,
let me ask why, when you do your post-mortem on that, because that's very valuable experience, even if it wasn't profitable. Like, sometimes, as they say, it's more about learning than earning. Like, when you think about that, what are your conclusions about why it lost?
I knew nothing. I didn't understand the companies I was invested in, and I thought it was better to just chuck some in. And I definitely learned that you can lose money, which I think is good. It made me respect it more. It made me understand that you don't just chuck money in and it grows up. And it massively informed the next decision I made, which was a winning decision after I got out of those rotations, in that you have to know what you're doing or else you're going to lose money. Yeah.
Yeah, I mean, 100%. It's amazing how much money, and not just in people's 20s, this is a problem that persists throughout people's lives until they've learned to back themselves and they have that formative win like you had. But essentially, I mean, yeah, 5 figures, 6 figures. I've seen people just punting on their drunk uncle's like Thanksgiving stock pitch. And the worst part about that is the only thing that you learn is don't do that.
Yeah.
And so it can be like a very expensive lesson with a pretty like thin moral, but at the same time, sometimes we need to learn through trauma. But then the key thing is making actual adjustments. You've paid tuition to the School of Hard Knocks. You make an actual adjustment so that it actually won't happen again. Because the issue is not that. The issue is if you're talking about that cycle and pattern of behavior for the next 4 decades, that's a problem.
Yeah, you don't want to get scarred out of the game, right?
That's like acute learning experience. Like the latter is a waste of life.
Yeah.
I mean, yeah.
Absolutely. No, yeah, I think as well with the whole thing, I just think it helped me operate from empathy, because like if I had like just, never invested until like I started like picking your brains and like going for it. Like every time when we first met, when I was cutting you at the shop, I was like, as soon as I realized that it was a thing and that like people I knew did it, I was like, all right, where can I do this? Where can I do this? Yeah, a lot of people are in the dark with it, So many people. And I feel like you have to remember that, like when you're, I guess you completely know that coaching it, but I don't know. Just getting deeper into it, it's more like, fuck, this is a real thing that real people are struggling with, Need to keep it front of mind.
That they're struggling with impulse buying.
Or yeah, just like not understanding exactly what they're invested in.
Yes. Yeah. I class that as impulse buying, but maybe that's too simple. But yeah, I mean, absolutely. And so going back to what we were talking about, know what you own. How do I do that? One thing you could try, it's not the only way, but invest in your addictions, see what happens.
Yeah. In terms of the last part, where to buy, that's pretty simple nowadays, right? You just explained the US perspective on where you can buy over there. I think
one thing about that that's worth understanding is because, when people, I think I saw this guy who he founded the company Hyros, and he was just like teeing off on social media hilariously about millennials or Gen Z or whatever complaining about how hard they have it as entrepreneurs, and like doing an intelligent and thorough job of juxtaposing information now versus information 20 years ago when he was starting out in entrepreneurship. Similarly, it is almost obscenely easy to do all of this now. So like my grandpa ended up making more money in retirement than he made in his job. When he came back from World War II, he was like struggling as a jeweler, but he was residing in Rochester, Minnesota, and I believe in IBM's backyard. Pretty sure I have that right. And ended up making a lot of money as long-term in like his local companies.
Yeah. Was that an IBM?
I believe so.
Yeah.
And for him to get information at that time, you had to like ring call the broker and then have them mail you a physical and probably outdated annual report that you then had to read and then ship back and then ring him back and be like, yeah, I want to place an order. And it was like $150 plus or minus to place a trade at that time. I think in $150, like 1960s, 1970s currency.
Adjusted for inflation, that must be crazy.
I believe
especially
so.
US, right?
But yeah, but suffice to say, regardless of like the specific details, it was exponentially more of a pain in the ass, exponentially more information scarce. Everything was more difficult and more expensive. And now it's like you can make eye contact with your phone and it's like, are you sure you want to sell? And it's like, wait, how'd you know that? And so you have to be careful. There's bad that comes with the good. The thing that's dangerous about it is you can drink a little bit too much of whatever your vice of choice is, roll over in bed and panic sell everything or panic buy more than you own. And so you have to be very careful, and you should create hard edges around your tools and your routine, I would have to say. So you got to be careful, because that's the flip side of it. But the good thing is it's infinitely easier to take action than it was. It's so, like, I use Robinhood as a new school tool, and Schwab as like the old school deep discount brokerage firm tool. And Robinhood is at a point where it's like Tinder. It's like swipe right, swipe left.
Really?
Swipe up. Like, and yeah, I mean,
it's like fully gamified.
It's to the point where it has, it's the technology is slicker than it is in New Zealand, but New Zealand will eventually catch up, no question. And it is good, but also a little scary. But at the same time, as long as people know how to use these absolutely extraordinarily hyper-powered tools effectively, it is aggressive enough, but also prudent enough, patient enough. I mean, the opportunity is just sitting here. And as we've talked about, that is going to, with certainty, be less than 20% of the people that are currently, that are alive and that are listening to this.
Man.
That's kind of a sad note to go out on.
Yeah, I mean, it's a challenge, right?